Hey folks, welcome back to episode 11 of ICT 2024 Mentorship. Before starting this episode, I really love to clear something. When I will show you some specific thing which ICT has shown in his episode 11, please don't ask me why is that. Because when I will explain this price action at the end of this video, I will simply ask some question to ICT by this specific video. Why is that? So your question and my question maybe is going to be the same. So please watch it because this is the summarize or my understanding or my confusion. Everything I'm just gonna explain over here. Before going over that, don't forget to give me the thumbs up and subscribe to my channel if you are new. So over here, you can see this is the new week opening gap which has formed this week, Friday close and Sunday open. And this is the opening gap. That means Sunday close and today's 9:30 open. So if you go to your regular trading hour, you will see this is the Sunday close and 9:30 open in Monday. That is the two thing I have marked over there. And below here, this is the new day opening gap. And I have already told you this is the new week opening gap. If you want to use the quadrant level over there, you can use that. If you want, obviously you can use that. If you don't want to use the quadrant level, it's up to you. That means if the quadrant level helps you, use them. If it doesn't help you, don't keep them on your chart, but focus on the quadrant level. Here after the 9:30, so this is the 9:30 candle. You can see that 9:30 candle open higher and go lower. If you know the daily PO3, so market is open, then it went lower, it went higher, and then it come little lower, closed over there. Okay, just let me over there. This is the PO3. So here market has opened, went lower until here, then it went higher. That can be there. Then it will go little lower and close around that area. This is the PO3. So far, ICT has shown that this is the, let me mark it. This is the Judah swing. This is the Judah swing or the fake breakout. Okay, so this is the fake move around that area. This is all the fake move below here. Then market went higher and it should close like this way. This is the first part about the PO3. You can keep that in your mind. I'm just going to remove them. Just keep them on your mind. So when market actually trade around that area, first ICT mark this sell side liquidity. So this all the sell side liquidity. Let me mark it as my sell side liquidity. Above here, this all the buy side liquidity. So let me mark that buy side liquidity as well. That also buy side liquidity from that specific Monday. When market started to fall around that area, it has used that opening gap. Okay, it opened there, then used that opening gap, trade the upper quadrant, failed to trade that upper quadrant for a little, then it has traded the 50% of that opening gap. After that, it went lower, cleared that sell side liquidity, trade that new day opening gap, started to go higher. When market was going higher, ICT was looking for that weak 50%. See this week. So he was expecting that market is not going to trade the 50% of that specific week, and instead trading that 50%, market will go higher and it will take this buy side liquidity. What else do you see over there? See this candle close and this candle open. They are almost at the same line, but below this, into these two candle, between these two candle, there is two indecisive candle. So when you will see this type of candle, you will see some kind of overlap area over there. That means it can stop the price and it can set the price lower. That is the new information I got from here. So keep that in your mind. If you see this type of indecisive candle between two candle, their opening and the close are around the same level, that doesn't matter, but still in this two candle there is some indecisive candle, you will start to give the priority to over that area. Okay, so if market can go through that area, then obviously the buy side liquidity will be triggered. If this type of things stop the price, then market can fall from that specific area. Okay, just this is the information you should write it down to your notebook. Okay, at the same time, ICT has marked from there to the opening new week opening gap high. So this is the area. As you can see, this area market has traded here, 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 then it went through that area. Okay, so from there to there, It went through this area and it never come back again to that area. This is why this area is important. Just keep that in your mind. I'm just going to remove that. I'm just giving you all the information I got step by step, so one after another. So here he was expecting that market is not going to trade that constant constant. Instead, it will keep going higher and take that liquidity. But when he noticed that there was some indecisive candle, it held the price, went through this constant constant and also below this week trade that, I mean, new day opening gap again, it went higher again. Okay, so when it went higher again, you wanted to see that this gap will be unfilled. I'm just going to remove this one, and this gap should be unfilled, and it will keep going higher. Trade that buy side liquidity. It went through this gap again. It was overzealous, took all of this liquidity, then it started to go higher again. When it started to go higher again, new day opening gap, it closed above this new day opening gap, tapped to this new day opening gap high, went higher again. See this parabolic gap, there is a very small parabolic gap. Just let me mark that parabolic gap over there. This is his institutional water flow entry drill. That means you should think that market is not going to close this parabolic gap. See this parabolic gap, it's not going to close this parabolic gap. It will tap to this parabolic gap and then it will go higher. Here, this all the relatively equal highs, this high, that high, they are relatively equal highs. Market has taken that relatively equal highs with a shallow run or a very small run. This is not the liquidity taken. Then finally market went higher, trade the new week opening gap high, took all the liquidity, went lower again, trade that specific balanced price range. So from this week to that week, this is the balanced price range. So if I just mark that balanced price range, so from here to here, this is the balanced price range. Price has traded that balanced price range. Then it went higher. It went through this new opening gap. This is the opening gap. Yesterday closing and today 9:30 opening. So that is the opening gap. Look here, market perfectly stopped the price by that opening gap. Week did the damage, took all the liquidity, trade the new week opening gap, bodies closed inside this opening gap, went lower until the balanced price range, failed to break that balanced price range here, then went higher again, closed above this new week opening gap, come back again to the 50% of that new week opening, not new week opening gap, new opening gap, then went through this buy side liquidity. So over here, this buy side liquidity has taken by that specific run. Here, if you take a closer look around that area, in this type of situation, you should look for that this parabolic gap is going to be open. If you ask me why, I'm really unable to give you the answer because I have some question as well to ICT. At the end of this video, you will see that question by this specific video. Okay. So he was expecting that market is not going to close this one, and this is the water block. It has traded that high over there. This candle has traded that water block high, and then it went higher. Why he didn't want to see that market will trade until this opening, which is the most sensitive area as per ICT? I have no answer for that as well. So he actually expected that it will trade that order block and then it will go higher. And finally, it actually take that buy side liquidity. So all of this area he was explaining every single time when market was going lower, just going higher, just going lower. This is the jagged area. So this whole thing is actually so frustrating. In his opinion, this is the frustrating area where most of the people lose a lot of money over there. So you should avoid this type of area. How? I don't know. But then market went higher and finally it worked. Why it is not going to work from there, I don't know. I know that this video is gonna be so confusing, but this is all I got from his video because nothing is clear to me. That's why I'm unable to explain the clarification. I just told you the same thing ICT told in his video. I just took the most important part from about the price action because most of the time he was just screaming and he was just telling that I have shown you that market is doing that, but he actually didn't tell why he was expecting that, why he was expecting that. He just didn't tell that. So I'm just unable to explain why it is you should expect like that. Okay, maybe you have to observe the price the way he has started this 2024 mentorship, where he told that you should observe the price, you should take a lot of journal. Maybe by taking the journal slowly, we will start to see this type of things, and we will start to understand this type of price action. Maybe. Okay, I'm not sure about that. So it has taken this sell side liquidity, open, then went lower, that is the manipulation, then this is the distribution, and finally market should close little lower and then it should close. That was the whole area around that area. I'm just not going into the lot of talking the way ICT actually talked about that. Now this area, that is the 7 a.m. You can see this is the 7 a.m. zone. So far we have learned from ICT's episode that you should start to look for relatively equal highs and relatively equal lows after 7 a.m. But he pushed his button over there. Now here I have some question to ICT, so I will ask them in that area. First, he has told that this is the breaker block. So let me mark that breaker block. Now, in my opinion, and until today, after watching all of ICT's video, I never find out why this is going to be the breaker block. So my question to ICT is, why that is the breaker block? Can you explain that? Yeah, you told that this is the breaker block for you, but why? Okay, so as you are doing the public teaching and we are trying to learn it from you, so I think you should give us this answer why that is the breaker block, how you can mark that as your breaker block. Now he actually took his entry from 15-second chart, but he explained what should you expect from 1 minute chart. So I am just going to close my session by explaining the 1 minute chart. I'm not going into the 15-second chart. If you interested to see it from 15-second chart, please go to your 15-second chart and you will see the PDR over there. So around 7 a.m. he didn't just wait for the liquidity relatively equal highs or relatively equal lows. He directly go to the trade from 15-second chart and he explained that when market went lower, this is the market structure shift around that area. This is the market structure shift. He wanted to see this is going to work as a inversion, as a institutional order flow entry deal. That means he expected that this gap will be opened. My question is why? Until now, we have learned it from 2022 mentorship that after taking the liquidity market structure shift, this fair value gap, it can be traded the full fair value gap. It can be traded that full fair value gap. But today you told that you are expecting the institutional order flow entry drill over there. And you showed that from 15-second chart, there is another gap. You wanted to see this should be open from 15-second chart. But I have a question, why is that? Then you have marked the 50% of that specific week. Okay, so this week 50%, and you told that it is the algorithmic price run to trade the 50% to that specific week. At least the 50%, this is the algorithm price run. Okay, I agree with you. It can happen over there. Then you have marked this week and you just marked this week 50%, and you started to tell that you wanted to see these candles won't trade the 50% of that specific week. Why is that? Why you wanted to expect that? Why did you expect this week will be traded, this 50% will be traded, but this week 50% is not going to be traded? Why you are thinking that this gap will be opened, some portion of this gap will be opened, and you are expecting this is your institutional order flow entry drill? So this is all my question to you. I don't know when and how I am going to get that answer. I hope that guys you will have the same answer. Why this one is should not trade the 50%? Why it should be traded that 50%? So this type of question actually made me confused, and obviously there was the buy side liquidity. You are looking for that buy side liquidity at the same time the lower quadrant of the new week opening gap, and you can see it perfectly trade a lot of area. I mean until the 50% I guess of that new week opening gap. So your target was filled over there, but why did you expect this type of things? We want that answer. So guys, that was the episode 11 understanding. After watching ICT's video, I just skip the 15-second chart, and I have already told you what ICT was actually looking over there. He was looking for buy, then market went lower. He was looking for sell, market went lower. I mean, so many things made me confused by this specific episode. This is not hate against ICT because I'm his fan. To be honest, I'm his greatest fan and I really love to learn from his video. But today when he told that this is the rejection block, let me show you. When he told that this candle close, this is the rejection block, I got conflicted. I got confused because in his rejection block video, he told that don't look at the color of the candle. Instead, look for the highest body. So that was his rejection block. but today he showed that this is his rejection prop. Why is that? Why he has changed this small information? I really don't have any answer of that. This type of things, okay, I got really confused by watching this episode 11. But if you know anything, I mean, I'm asking to all of you, my viewers, if you have the answer, then just please write it down to the comment box, because I really want to know all of this answer. ICT told, you don't know what I know. I agree with you, because you are the creator of this concept. We really don't know what you know. But when you are teaching us in YouTube for free, and you are showing us something, you should tell us why is that. At least why is that. You don't need to tell everything about your PDF. You don't need to show us everything if you don't want, no worries. But when you will show us something, you should tell us why is that. Why is my question? Why? So I hope that this video is going to be little insightful or maybe little confusing like me. If you think you have the answer or you have some confusion, just let me know in the comment box. So until the next video, cheers.